What's the difference between a foundation and a trust when paying taxes in the USA?
In the case of a foundation, it's a non-profit organization, and if there is this classification, 501c3, 501c3 is a classification for non-profit organizations that are exempt from taxes, the foundation becomes tax exempt. It means that all the income that the foundation receives is non-taxable. But, and this is the big but, the foundation and the non-profit organization must present a plan for expanding the assets according to the program that the foundation and the non-profit organization has created when it was filed. I can only create a 501c3 through a program that I am going to reveal to the IRS when I am creating the 501c3, when I'm creating the foundation. I have to tell the IRS what is my intention when I create this, how I'm going to distribute the asset. First of all, the income, the donation, how much I expect to receive in donations. One. Second, how I'm gonna use, how I'm gonna use or expend those donations. That I have to tell the IRS from inception when I open my foundation. So according to that, when the foundation receives the donations, I have to spend it in the programs that I created when I established the foundation. That's the basis of a 501c3 foundation. It could be, for example, a church is a non-profit organization, but it is until the church applies for the IRS recognition as a non-profit, tax exempt, that the donations that I receive as a church are tax deductible for the donors. It's until I apply for the 501c3 exemption with the IRS that my donors will be able to deduct the donations that they gave me in their tax return. There are churches that they don't have a 501c3. They are not obligated to report to the IRS because a church doesn't work. A church receives donations, and then with those donations pays for the rent of the place where people meet, people who work at that place, and so on. But in the case of a 501c3 or a tax exempt foundation, of tax exempt organization, it is required for that to get that certification to apply to the IRS and get the approval from the IRS. That is a foundation in the United States. There are foundations also in Panama and in other offshore jurisdictions. So the objective of those foundations basically is to apply the donation that they receive according to the plan that they have created. It's the same concept. Only the offshore foundations do not report to the IRS. They report to no one because no one is controlling the foreign foundation. So foreign offshore foundations, for example, they don't have any obligation to report. Therefore, they are able to accumulate the income that they receive from their donors. That doesn't happen here in the United States. If you have a nonprofit in the USA, you receive donations, you are supposed to spend the donations, not to keep them, because if you keep them, it's not a nonprofit. You will be the tax exempt will be taken back, and all those donations will be taxable. So you have to spend the money. In the U.S., the nonprofit cannot accumulate cannot accumulate the money forever. It has to spend. Outside of the U.S., in offshore foundations, things are different. There can be an accumulation of income, and there's no problem with that accumulation because no one is requiring the spend of that. But many times, foundations, offshore foundations, are not used to accumulate income. They are not to accumulate donations. They are used to receive, for example, shares or receive assets from Latin American companies or from any company from any part of the world, any country, and to keep those assets or the title of those assets with them. That's basically what foundations do in other countries. For example, there are foundations in offshore foundations, and they receive funds from foreign companies, and those funds are either kept with them or they distribute those funds to other nonprofit organizations in Latin America. That we also seen that in offshore structures. But here in the U.S., that doesn't exist. You have, if you receive income, you are supposed to spend that income in the programs that you reveal to the IRS, that you gave the IRS when you opened the nonprofit organization.